All right. Well, we have three of us on here right now, and we know we have some others registered to join. So we will see who jumps on here. Uh, we are streaming live to Facebook, to LinkedIn, to YouTube, and also to X. And joining me today are my partners here at the Ross Group, Chris Kearney and Alec Gagné, coming to you live from multiple state locations. I think we're all three in different states right now. And we are weathering the storm that has hit the west or the East Coast, not the West Coast, the East Coast. And we are excited to bring you construction lending for real estate agents today. It's one of our favorite webinars that we host. We're going to roll through this in probably under 30 minutes today. So we're going to go through this pretty quickly. If you do have any comments and you want to post that in the comment section to the right, please feel free to do that. If you are watching on any of our other social media platforms, there's a live link on those platforms if you want to join in and comment as we're going. This is being recorded as well as the fact that it's live. So we will post a link to this to YouTube and upload this to our Ross Group team channel. And we'll probably use this for our rate sheet this week. So we'll blast this construction lending webinar out there for everybody to educate themselves. So we will kick right in here, and I'll go to the next slide. What you're going to learn today: construction loans and highlights, the loan process, how the process works, and how to help more clients get more money for that construction project. And we will explain what construction lending means and what types of projects we're actually talking about here. And just to verify before I continue, Chris, you can hear me pretty well, right? Gotcha. I figured you would have already stopped me, but I might as well ask.
All good. You sound great.
Perfect. Construction loan highlights. Let's get right into it here. What is a construction loan? Well, I like to say it this way: if you can't find the perfect home, whether it's new construction because you're going to buy an existing project, and when I say new construction, I mean these builders, these massive builders. We have our own builder, Van Meter Homes, the Ryan Homes, the NV Homes of the world, the Pulte's, the Brookfield, all these type of homes. They will buy land and they will build communities. That's not what we're talking about. But if you can't find one in that community and you can't find a resale that fits all of your needs, you might want to renovate your current home, or you might want to find a piece of land and build a custom home, right? So you can do either of those. Construction loans are obtained to build, renovate existing projects. So if you're in your current home and you're not happy with the status, but you love the street you're on, you love your neighbors, you love the school district, your locality to work, right? You love all of that, but you don't like your home anymore, and you wish you had new bathrooms and an updated kitchen and a hot tub out back. You can do a renovation loan and you can make your existing home truthfully your dream home. Settlement occurs prior to the start of construction when we do a construction loan, and we're going to work with your contractor or builder and make sure that they are funded incrementally for the completed work during that process. If you need a local or trusted builder or licensed contractor, between the three of us, we have a ton of connections. So we're able to connect you with whoever you need, depending on the geographic location in which you're looking to build or renovate. Construction loan options, I touched on a little bit of this. You can buy a lot and build on it. You can renovate your current home, as we just discussed, or you can purchase a new home and renovate that new home. So you can actually go buy a resale that might not be perfect for you right now, and then you can renovate that home as well. Construction loan features. We've been doing these for just shy of 25 years right now. So October of this year will be my 25th year of doing construction lending. It's something that we have a passion for. I always use the analogy or the saying: if you called 100 mortgage companies and asked for a construction or renovation loan, only about 2 or 3 are going to say that they actually have construction loans. So they are truthfully unique in nature. They are 12-month loans. and they're fixed rates. We do have a one-time and two-time close option. The one-time close is in the state of West Virginia. So if you need a construction loan in the state of West Virginia, they do not allow for balloon payments. We'll explain a little bit of that later. The two-time close is where it's at. That's the best product on the market. It gives you the most flexibility on multiple fronts, which we'll talk about. Very flexible guidelines here at Intercoastal with regards to our construction loans. We actually have a lot of partners with a lot of other mortgage lenders that either don't do construction loans, or if they do, then they don't have any flexibility. They refer their clients over to us as well. We can do a construction loan for a primary or a second home. That's very important to make note of. You might be asking, why can't we do it for an investment property? Alec or Chris, do you want to explain why we can't do it for an investment property? What's the difference? Why can't we do that?
I can answer, and sorry if you hear children in the background on this snowy day, but investor construction loans, those are completely different. Those are your flippers, people that are, looking to fix up a home and then immediately sell. That is not what any of our construction loans are for. Our construction loans are for the end user, the person that wants to build that forever home or that vacation home, second home. People that want to build and keep the property. That's what this is for.
Absolutely. And I love the kids screaming in the background. I'm just happy they're not in my house right now. Like Chris said, if you're looking to do a construction loan on an investment property, that's a commercial loan is what it is. It's someone doing it as a business. So we have plenty of folks we can refer you to if you are looking to do it as a commercial loan and flip that property. But as long as it's a primary or second home, we can help. Your builder will be funded incrementally in draws throughout the process through their draw schedule, which we would approve up front. And following construction, we will originate what's known as the permanent loan. That's your more traditional 30-year fixed mortgage. You don't have to convert out of that construction loan once your home's built into a 30-year fixed. You can convert into a 20-year fixed, a 15-year fixed, an adjustable rate, a 10-1 ARM, an FHA or a VA loan for that matter. So we have plenty of options to convert into whatever you like. Again, the flexibility here. Max loan to values, and we'll make note of the highlight at the bottom. As a lender, we must have guidelines that we try to follow. And those guidelines are stated right here. We're calculating your loan to value based on the as completed value of the home, as long as you already own the lot or own the home. If you're acquiring the lot or acquiring the home, we go off cost, not appraised value. So we can explain that a little bit further. Our loan to value limits will go up to 80s to 1.35 million, 75s to 1.6, and so on and so on. We do have exceptions because this is, again, in-house and portfolio for us. So we have actually done construction loans in the past of up to 5 million with bank approval. And those loan to values, once you get out of into the exception category, they can vary depending on the strength of the borrower. Reserves, assets, income, credit, all of that stuff will be factored in. So what does this slide basically mean? This gives you a general guideline of what we can do, but in general, we're extremely flexible and we'll have a lot of different options. Just to give you an example here, if your lot cost is $750,000, your construction cost to renovate or build is $600,000, there's your total cost, $1,350,000. We will lend up to an 80% loan to value. So that means your down payment would be the $270,000, your 20% down plus your closing costs. But let's say you already own that lot, and let's say you still owe $750,000, but let's say the lot's worth $1.2 million. It's in McLean, Virginia. It's on the water somewhere. It's a very ideal location or valuable location because a lot of the value's in the land. Then we could lend off after built value. So if that total cost was 1.35 million, but let's say the value after you build that and appraisers telling us is 1.6 million, then we can lend you up to 80% or 75% of that 1.6 million. So you might not need 270,000 at closing. We actually have construction loans where clients literally come with just the closing costs. So we will want you to come with your closing costs, but we can fund basically 100% of the projects depending on the equity you have in your home. Let's get into the loan process. Pretty simple process for us because we have the experience, and we'll make it simple for you as well. I'm not going to read this to you because you're going to have this on YouTube, and I know you can read, but we will touch on a few things here. The loan process, once the builder completes the draw schedule, they'll send that to us. One thing that a lot of our builders love about Intercoastal Mortgage and the Ross Group is we will use the builder's draw schedule as long as it's within reason, right? Many lenders require, here's our draw schedule as a lender, and you have to follow it. Well, each builder's a little unique. Each builder might have different vendor connections or contractor connections where they know things are funded differently. So their draw schedules might be different to fund their project from builder to builder. So again, as long as it's within reason, we will use the builder's draw schedule. Most draws are around 7 to 9 draws, maybe call it up to 10 draws in a project, right, of any scope. We do need between 48 and 72 hours for an inspector to complete. So once your builder is done with draw number one, say draw number one is site work. So the site's being cleared and the foundation's being poured. Let's say that's draw number one. Once draw number one is complete, we will move, we will send an inspector out. We will make sure that the work on draw number one that was supposed to be done is in fact done. And then we will release draw number two. Another benefit of Intercoastal and the Ross Group is we use a system called BILT, B-U-I-L-T. And BILT is a back office interface where your builder, you as the consumer, Alec, Chris, Claire, our entire sales team that's representing you has access to this back office where we manage your entire project. You can submit draw requests through there, your builder can, and we can release funds as your project is being inspected by the appraiser or home inspector in between to make sure things are happening. They can upload photos of the work complete right from their cell phone up into BILT, and it helps us expedite that next draw request and the release of your funds. We're great at releasing those funds within 24 to 72 hours. So when you put in a draw request, your money is there. Chris, Alec, why is it important that the money is there for the builder? Why do I stress the fact that when they put in a draw request that the money arrives there? Why is that so important?
I can answer it. Builders are happy when they don't have to sit around and wait for their money. So if you ever drive by a home with construction just sitting there, you see equipment sitting still, not being used, it could very well be because the builder is waiting on their money so that they can continue the project. So happy builders equal a happy process equals a happy home, and nothing makes builders happier than getting the funds on time and quickly so they can keep things moving.
Absolutely. Absolutely. And why is that so important? If your builder up front tells you your project is 6 months and you're working with a different bank that takes 2 to 3 weeks to release funds, that 6-month project is now 1 year. Well, I'm assuming when you as the consumer hire that builder or that renovation company that's going to do the magic and make your home what you want it to be, that when they tell you 6 months, your wheels are turning. You're ready to move in 6 months. You're ready to have your house back in 6 months. You're going to be really upset when you fast forward 12 months. And the only reason the project's not happening is because your lender, when you didn't work with the Ross Group, is taking forever to get you those funds. We're going to make sure that doesn't happen. So we'll go to the next slide here. This is an example draw schedule. Okay. And again, I'm not going to read through this with you, but you will see an example of the draws being requested and the percentages. So some of that is going to be, for framing, right? And then you might get into HVAC or plumbing or electrical. That all happens behind the drywall. And then you might get into the drywall, right? Painting. And then towards the end, you're going to have the finishes, the trades folks that are going to come in and put the nice cabinets in your kitchen and make sure the toilets are installed and the refrigerators and the appliances and everything. Depending on your scope of work, that's all going to happen. But this is an example draw schedule to give you an idea based on a contract price of $493,000. And again, that's for the build and the renovation. That's not going to include the land. Can't decide on a builder. Again, we've talked about this. We can help you figure this out. At Intercoastal, we use an estimated figure to build or renovate. So when we have our initial consult with you, whether it's Alec, Chris, or myself, when we have that consult with you, we're going to talk to you. Have you already selected a builder? Do you have an idea of the scope of work that you want to have done? Has the builder given you an estimate? They've maybe given you a verbal. You've already talked to them. Maybe you don't have plans and specs yet, but the builder said, yeah, I've done this for a long time. And to do what you're looking to do, it's going to cost you $500,000 or $300,000, whatever that number is. And we're going to take that and we're going to apply that to your scenario, whether your scenario is you have that empty lot already, or you're buying the empty lot, or you have the home that you want to renovate, or you're working with your real estate agent, which is our agents on here, and you're taking those clients out and you're trying to find empty lots, or you're trying to find a home that's in an amazing location, but you have to tear it down and it's going to be a full rebuild. Or you find a home in an amazing location and it's not a full tear down. It is something where you're going, wow. And I tell you this as an agent, when you're taking clients on a weekend and you have 5 homes you're going to show them on a Saturday and Sunday, and your clients are walking through these 5 different homes, and that first or second home you took them to, they're looking at you going, wow, this is awesome. I really like this home, right? So depending on your real estate agent's name's Steve, and Steve's taking you into the house, and you love, as the consumer, you love this home and you really want to buy this home, but your challenge is you're walking through here going, I hate the kitchen. I wish a laundry was on the first floor, not the second floor. I wish the bathrooms were renovated. Like, you love the bones, but you can't see a path forward. So you don't make an offer on that home. Well, as a real estate agent, why not go back to your client and go, hey, I know you love the street, you love the location, you love everything about this home except for the fact that it needs $200,000 in renovations. Why don't you go back to the Ross Group and say, have them work up a construction loan, renovation loan for you, and let them show you what it would look like to take this perfect home in the perfect location and make it perfect, make it your home specific for you. How to help your clients. We kind of talked through a lot of this. Let's talk about real estate agent challenges. So you have a client interested in buying the land so they can build their dream home, and they're not sure how to acquire the land. Do they need to finance the construction first? Do they need to acquire the land loaned? Well, the result is a land loan may not be needed. If a client has a piece of land identified and they want to start building on that land in 2, 3, 4 months, pretty quickly after they settle, then they don't need to get a land loan and then a construction loan. We will just do a construction loan to acquire the land and to fund the project. We will do that all together. So they don't need to have 2 separate. Now, I've had consumers come to me and say, okay, Rob, I want to build my dream home or my second home in, I don't know, 2 years from now, but I have the lot that I want to buy now. Well, we're going to connect you with someone that'll do a land loan for you. And in fact, we're going to start doing some land loans ourselves soon, but we'll connect you with someone that can do a land loan. And then when you're ready to start building, you're going to want to come to us about 60 days before you want to start that build, and we'll connect you and hook you up with a construction loan. So that's how that will work. Let's go to Realtor Challenge number 2. And we are actually going to be pretty much right on time at that 30-minute mark. So we got about 10 minutes left. If your client is expecting another baby and they need more space, as you can see, Chris has gone off screen because it's a snow day and he already has 3 kids under 5. So I don't think Chris needs another baby. But they already love their location and schools, but the home is just too small for their growing family. Buying a new home in a new neighborhood is a challenge because blah, blah, blah. Everyone gets 10 offers. How do you overcome this? Well, we just talked about that. Renovation loan. Since they already own their current home, we can use that after built value to build that in. So if you see the photos there, there's a before and after, right? Pretty amazing transformation considering the fact that they just tore that house down and built a new home on the lot. But they already had a ton of equity. That lot in that photo was worth close to $1 million just due to the location. So, and they owed zero. They'd been in the house forever. So they could build their new home for 1.2 million. But when you put that photo on the right and they received an appraisal on that photo on the right, the house was worth over 2 million. Well, they owed zero and they needed to borrow 1.2 million for construction. So I'm throwing a lot of numbers at you to basically say in this example, we at Intercoastal we were able to lend them 100% financing. So they literally obtained all the money they needed to build that home. Now, as a realtor, you're going, well, how's that help me? My past client's not going to buy or sell right now. They just want to renovate. Well, you're the expert. So you might have a client come back to you to say, I want to renovate my home. How can you help? Well, you can connect them with us. We can keep your homeowners really happy, your past clients really happy, and we can do a renovation loan for them. And what's that mean? It means 5 years from now, they might go to sell their house, and you as the agent that were the expert and connected them with us, you're going to have a much nicer listing down the road. And also remember that client that you referred a renovation loan to us, they have friends, they have family, they have coworkers, anyone that's saying they need to work with a realtors, they're still going to recommend you because you're the expert on all fronts for them. Realtor challenge number 3, as we are approaching the end of this, your client wants to purchase an older home to tear down and rebuild in a highly desirable area. Well, we're physically located kind of in Northern Virginia outside of the DMV market. So Vienna, Alexandria, North Arlington, these are very hot areas where there's no land available. But every time a home comes on to the market, there's multiple offers first weekend. And we see it all the time. I had a client last week lose to a cash offer with 22 offers on the home. And I'm not kidding. There was 22 offers last weekend. Your client can't have their builder provide plans and specs, have everything. There's just no time. So if a client finds an ideal home that they know they want to tear down or renovate, they need to be able to act quickly. They might not already have a contract with the builder. Well, that's one thing we can do. We can use a construction loan to close on the home before the builder's even selected. No one else will do that. No one. And we can close on that in 18 to 21 days. We might even be able to close in 2 weeks on a construction loan. And anyone watching this who's worked with us before knows on traditional mortgages, we can close in 8 to 10 days. Construction loans do take a little longer, but when I say a little longer, I'm saying 18, 19, 20, 21 days, right? Still quick. So we can help you be competitive to win that before you've selected the builder. Benefits of the ICM construction loan. I've been talking about this for the last 30 minutes. Local underwriting, quick closings, local administration through Built, which we talked about at the beginning of this webinar, tons of flexibility, tons of efficiency. No one has more experience. Maybe my CEO, I'm pretty sure he does, but no one else has more experience. And we are the #1 construction lender in the DMV area. So we are very, very good at what we do. We are very knowledgeable. We can educate you. We can educate your clients. Understand that when any of the 3 of us talk to your clients about a construction loan, we're pretty much doing this right here. It's usually a 30 to 45 minute conversation where we are our job is not to sell them anything. That's never been our job. We truthfully are educators. That's what we are. That's what we love to do, right? Educate your clients, have them understand the process just enough to be dangerous, but not enough to take our jobs, right? So, and we rolled through that in record time, 25 minutes, because I know everyone's excited to go out in 3-degree weather and go sledding. We haven't had any questions come through, and that's okay. But do we have anyone before we jump off here that has any questions? And if so, go ahead and post those in the comment section. And if not, we will stop the recording shortly. We will have this uploaded to YouTube shortly, and we will make sure everyone gets a copy of the presentation. Helpful? Chris, did your little one learn something today?
This might be a sign that you need a construction loan. Something that looks like this running around your house.
Yeah. You know, and here at the Ross Group, we have closing gifts. So if you do a construction loan with us, we can probably arrange, getting a baby for you. So
yeah.
it wouldn't be an issue.
You can take one of mine.
take one of Chris's. We're auctioning them off right now. So, anyways, having a little fun and appreciate those who were able to join us today. I've been watching the live stream. We've had between 3 and 12 people on here, so it's kind of come in and out. But excited to have folks on here. For those of you who didn't jump onto the live stream and viewed this from Facebook, LinkedIn, YouTube, X, we appreciate you guys jumping on as well. You have our contact information, and we are the Ross Group. We are always working together to serve you better. We will talk to you all soon. Take care.
Thanks, guys.